is Mommy Beluga Investing.
Hi there, back again with me Rati in Mommy Beluga Investing. In this video, I'm going to analyze HRNET Group Limited with the stock symbol CHZ and traded in SGX main board since 2017. This is one of the analysis requested by one of the viewers in August this year. It's been a while. My quick take for HRNET Group it is an interesting company that I might consider making position in. It seems to be in a crisis resilient company with pretty interesting dividend payout. And finally, to be growing steadily for at least the last 5 years. How did I reach the above conclusion? Follow my video as I quickly discuss the company's profile, EPS, dividend, and other numbers. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, please do not hesitate to put in comment section. It'll probably help me to get more perspective and learn more. Okay, before getting into the data, I read out the disclaimer first. Disclaimer, this is an amateur video. My main intention is to record my journey, learning and practicing investing from scratch. Over time, you may find that some inconsistencies in my analysis and conclusions. Please bear with me. My analysis is limited to the public data that I can access and the scope of my knowledge. Both of those change over time. The video shouldn't replace any financial advice and neither suggestion to take a decision, buy or sell in the stock market. Please conduct your own research before making any decision. But if you do your own research, I hope this video could be useful somehow. Okay, now let's start from a brief company's profile. It is the company HRNET was founded in 1992 as a recruitment company. It said it was started with four-person company back in 1992, which now grow into 900 consultants across 13 Asian cities. It is listed in SGX main board in 16th of June 2017, which how we can have a peek on the company's performance and also potentially become small owner of the company. The company provides end-to-end recruiting services for clients that require help to source their manpower position that include placement for mid to senior level, interview recommendation and selection, onboarding, and many others. It made me wonder why had I not scouted by this company when I was actively looking for a job before. Okay, in terms of ownership, the company mainly held through custodian accounts such as Raffles nominees, TBS nominees, Citibank nominees, and so forth. But going a little further, HRNET Group seems to me is a family business. About 75% of the share is held by Sim's family, where the current executive director is the daughter of the founder, Mr. Peter Sim. Okay, now let's look at the company's performance through its EPS or earnings per share. So as usual, here I plotted earnings per share since 2017. I also added the horizontal green dashed line as a guide to zero level. Earning below this line indicates that the company is recording a loss for that particular year. From the available public data, HRNET Group had not reported any loss, at least for 4 years. There was an earning dip in 2020, which could be the impact of COVID-19 pandemic. The company noted that the year have been plagued by hiring freeze in a lot of sectors, which are the company's main business. Going further deeper to the 2020 annual report, I didn't find sufficient clue for the earning decline. In the contrary to the earnings, the company reported record-breaking revenue in 2020. The revenue increased on almost all business segments, mainly the flexible placement, FS, only professional recruitment, or PR, were noted to have revenue decline. Overall, the increase in flexible placement segments more than enough to offset the professional recruitment segments. Looking at the expense department, the companies noted 7% cost reduction with tightening measure. One of those by reducing the employee benefit and travel cost. So looking at the operation alone, it doesn't really explain the earnings drop. Another major income decline was from interest income, which is half from the previous year. So could it be that the earning decrease was caused more due to the declining interest rate Okay, so let's bring up the cash information. So here I add the company's cash information in purple bars. At the same time, the current liability in dark gray. We can see that the companies have plenty of cash, which might contribute to the earning in interest income. Yeah. Okay, now let's look at the dividend. To see the sensibility of dividend payout, so here I plotted as usual 3 layers of information. The first one is the dividend payout over the last 11 years, which are plotted, not over the last 11 years, since 2018, yeah, which are plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the points, I have annotated with 2 numbers. The number above the markers are the dividend payouts in Singapore dollars, and the one below are the payout ratios to the respective year's earning per share. As a comparison to their earnings, here I plotted back the earnings per share as a thinner line with the same color. Seems to me HR Group is pretty prudent in their dividend payout. As far as the public record available, HRNet distribute between 34 to 60% of their profit as dividend. Pretty comfortable cushion in my opinion. The picture looks even better when we look back at the cash and the current liabilities. It looks like a very cushy financial position. Now this is what a dividend hunter might be waiting so far, the dividend yield history. Here I plotted the average dividend yield per year as the round markers. At each of the markers I place an error bar, which represents the range of yields over that year. The variation in a year is caused by the volatility level of the share price. The yield increase if the share price decrease and vice versa. We can see here the dividend yield is pretty interesting. It peaked in 2020 to average 5.86%. It happened when there are plenty of sell-off and most equity price plunge. In 2020, dividend yield is not bad as well. The average we can get 3.64%. It is definitely better than the bank deposit. Okay, now let's take a look at the market valuation. The CHRNET Group market valuation, here I plotted 4 layers of information, which are first the price, which represents market valuation of the company. It is also the easiest information that I can obtain. But price alone is sometimes misleading for the value of the company, so I'll include some other fundamentals indicators to help me to decide. The second layers of information is the 10 times earning multiplier as usual, which here I plotted as a dashed green line. 10 times earning multiplier can be considered as the price where price to earning, that's the P ratio, is 10. For me, I consider 10 times earning multiplier has 2 purposes. The first one, it indicates the price where I have higher chance to break even within 10 years. Second, as a consequence for the first reason, I'll consider share price above 10th earning multiplier to be expensive. The third layer of information is 15 times earning multiplier. With the same principle as 10 times earning multiplier, price above this indicator will be deemed as expensive. Here I plotted the 15 times earning multiplier as dashed yellow line, just like the traffic light. I'll start feeling nervous if the price crosses this line, particularly for non-growth company. The fourth layer of information is the 20 times earning multiplier. Here I plotted as a dashed red line. I will consider the share price to be super expensive if it ever crosses this line. For non-growth company, I consider to cut down my position if this happens. Okay, so now let's see what's going on with HRNet share price. Okay, now let's look at the script. Historically, the market seems to be quite optimistic, but stay cautious about the company's prospect. This makes the market valuation stick pretty close to the 10 times earning multiplier. At the current price, it is slightly above 10 times earning multiplier. So here again, we have the annotated price chart. Based on the current earning multiplier, I will put a reasonable price at 70 cents. As of November 2021, when this video was prepared, HRNet stock price was at 80 cents, which is rather interesting. Yes. Okay, so now conclusion. The first one is, it is an interesting company that I might consider making position in. It seems to be a crisis resilient company with pretty interesting dividend payout. And finally, crisis resilient. And finally, to be growing steadily for at least the last 5 years. Okay, that's all for today. Thanks for watching. Don't forget to leave comments, and if this video is useful for you, please subscribe to my channel. It's free for you to do so, and it means a lot for a beginning YouTuber like me. See you again in my next video. Bye.